Welcome. This is Annuity News Now. For many, the criticisms of long-term care insurance are pretty straightforward. Well, sometimes it can be expensive, and two, if I don't need it, I'm out that money. The question is, what are some alternatives? My guest is J. Brendan Ryan with the Robert A. Ryan Insurance Agency in Cincinnati, Ohio, and he's been writing about this in the Cincinnati Enquirer. J. Brendan, it's a great pleasure. Thanks for joining us today.
Hello.
So talking about long-term care insurance, you know, I think people are told two different things, that the average cost for long-term care is somewhere around $300,000 per person, but sometimes you don't need it. And what are the alternatives? What are the answers here?
Well, first let me say about long-term care insurance. I've been a great proponent of long-term care insurance until recently because some better alternatives have come along. The flaws of long-term care insurance are that, first of all, it is expensive. And if you don't use it, if you don't need it, unless you buy a non-forfeiture option, if you don't buy it, you lose everything. The non-forfeiture options are expensive, and people generally don't buy those where there's some benefit if you drop the insurance down the road. But they're too expensive to be practical. And so most people buy the long-term care insurance without non-forfeiture options. If they don't need it, they've lost $10,000, $20,000, $30,000, $40,000 in premiums over the years if they don't need the coverage. Also, whatever premium they're paying now, it's a good bet that those premiums are going to go up.
So then let's talk about the numbers first. How many people normally need, what's the average percentage of people who need long-term care at some point?
I believe the statistic is something like 60% of senior citizens will eventually need long-term care of some sort.
Okay. And long-term care insurance typically pays for what?
It pays, a good long-term care policy will pay for both nursing home, assisted living, and home health care, as well as other more minor types of provisions such as adult daycare for Alzheimer's patients and things like that.
Okay. Those are all justifiable, expenses. So let's talk about what it typically costs here. I'm a 50-year-old guy. I'm in good health. If I were to buy a policy, say that's, I don't know, would cover $500,000 worth of coverage, what would that typically cost me?
For you, in terms of long-term care insurance itself, that's like saying, what does a car cost? I mean, there's so many variations, but I would say something like that would cost you a couple of $1,000s a year.
Okay.
At this stage, right now. Now, 5 or 10 years ago, 5 or 10 years from now, the company might come along and say, "Hey, we've got to raise you 63%." One company came along 9 months ago and said we're going to have a 40% average 40% rate increase for most of our long-term care policies. The ones I've seen are 90%.
Not good. Okay.
For that company.
So you said you've been a proponent for long-term care insurance for quite some time. What other options are out there? And I noticed one in your article that you mentioned is linked to an annuity. Can you talk about that? Yeah,
the law changed several years ago and authorized, and the law was just recently implemented, although it was the law was passed back in '05, I think. The new benefits weren't available until very recently under the law. A long-term care component on an annuity policy says that give us your money in the way of a single premium annuity, and if you want, we will link it to long-term care. So whatever your cash value is, whatever your annuity benefit is, you can use that for long-term care benefits instead of using it as a regular annuity income. You can dip into it without surrender charges, and you can do this tax-free. Even though you might be taking out untaxed dollars because of the growth in the annuity over the years. You can dip in and take out part or all of that cash value. Plus, we will leverage, as some companies will say, if you want, we can double that benefit if you need it for long-term care. If you have a cash value of $100,000 in your annuity, we can make as much as $300,000 available for long-term care. So it can be leveraged over and above just the cash value amount.
And if for some reason you don't necessarily need it, then the money that you
put
in,
annuity.
It's still there.
Still an annuity.
Well, that sounds like a great idea.
Well, it is a good idea.
But that's for people who tend to have that kind of money lying around.
You've got to have a single premium. I don't know if if there are companies that write annuity, this kind of annuity that will do it with an installment premium, I don't know what it is, but how long does it take to build up a significant fund if you're paying in installments?
Right.
You cannot use, if you have an IRA that's funded with an annuity, you roll an IRA over into, you roll your 401k into an annuity contract under an IRA. You can't roll that. You cannot roll that tax-free into one of these annuities.
Okay.
You have to pay tax on the money that comes out before you can buy this kind of annuity.
So there are some issues related to non-qualified sort of things, right?
It's just non-qualified money you can use, right?
Okay. All right. Then
qualified money after you pay tax on it.
There's always a few tax issues, but all in all, it seems very logical.
Well, and the tax benefit of that annuity is pretty good, because if you draw money out of an annuity, anything you draw out that has not been taxed will be taxed to you when you draw it out. If you draw it out as long-term care, it's tax-free.
And you also said, too, and I want to digress here, that you said that if you have a certain amount that you've put in, you can actually get an increased amount in return.
Yes.
If you use it for long-term care.
Yes. If you have a $150,000 cash value in your annuity, how far is that going to go for long-term care?
Right.
Maybe a year and a half? It's not a practical long-term care benefit. So insurance companies are saying, well, we'll extend the benefit, and we'll have to charge for it. But of course, that benefit won't be, that extended benefit won't be available until the cash value of the annuity is consumed.
Okay.
So it's less likely that people are going to dip into that extension than will dip into the annuity. And so it doesn't have to. We don't have to charge that much. And the way we charge is we take it out of the interest that we're crediting to the annuity.
And another option within the same realm is an LTC benefit, which is linked to a life insurance policy?
Yeah, to me, that is by far the best way to deal with long-term care needs.
Okay, talk about it.
It does not take a single premium. It's not a use it or lose it sort of thing. Just like with the annuity, you know somebody's going to get the benefit. In terms of life insurance policy, either you're going to get the benefit during your lifetime, or your beneficiaries are going to get the death benefit at death. So there's a definite 100% payout guaranteed. And what's available, the long-term care benefit that's available, is 100% of the death benefit. So if you have a $500,000 life insurance policy, you have $500,000 of long-term care benefits available to you. If you use half of that before you die, the other half goes to your beneficiary. And you take it out tax-free, and of course the death benefit is tax-free to the beneficiary.
Well, we certainly appreciate you sharing your knowledge with us. Thank you again.
All right, thank you very much.
I'm Scott Drake, and you're watching Annuity News Now.